Hello, Dr. Dana Tassone speaking with participants in 4295, hft4295, discussing Chapter 9, Management Control Functions. You know that oftentimes when we hear the word control, we think of it in a negative light, and there's a reason for that. The reason is that we think back to those micromanagers, otherwise known as control freaks, who sometimes prevent us from doing our jobs. And in its truest fashion, control is not a bad thing. Control is merely good business sense. It merely helps us to enhance our use of resources and put those into the transformation process in order to achieve outcomes. So you know that resources are inputs. They come in the form of material resources, human resources, technological resources, and financial resources. And when we talk about control, if we had to define it, control is nothing more than a standard. We talked earlier about standards, and control is measuring the actual performance to a standard. And so when we talk about resources, which is really the basis of this chapter, we're talking about lowering costs and enhancing efficiency. Through what? Through material resources, financial resources, human resources, and technology. So you've already had a full course in managerial accounting. You've had a course in financial accounting. You've had a full course in hospitality information systems. You've already had a course in human resources management. So this chapter just touches on what you've learned from all those courses and applies it to the business environment, the service business environment, which is what we're all about. And so if we look through the chapter, we see basically what I already told you. We go into an area called financial controls. We talk about a technology called accounting information systems, which we use to measure the dollars and cents of the accounting department. As you know, accounting departments have different areas: accounts receivable, accounts payable, payroll, and other types of ledgers that fold into the general ledger for the business. This is all business stuff. And Figure 9.1 gives you a picture of what an accounting information system might look like. And we know that the general ledger is the hub of the accounting systems, and all of the other systems are based around that systems. So when we talk about financial controls, we're really talking about two things. We're talking about the control of operating expenses, and we're also talking about the control of capital. Capital refers to finance, operating expenses refers to accounting. And so the property controller is the person who's responsible for operating expenses, and the finance, the chief financial officer, the CFO, is responsible for capital investments. You know that the number one cost in our business is labor, of course, which we'll get into. So when we talk about material resource control, we're of course talking about two things. We're talking about procurement, which is purchasing, and inventory controls, knowing full well that the longer inventory remains on our shelves, every day, every hour, it's costing us money. So the trick to inventory control is turnover. We want to turn our inventory over so we're not eating up dollars sitting on the shelf. We want to put that into working inventory, and we want to bring in new material resources at the appropriate time, and that's where just-in-time purchasing came from. Procurement, of course, is purchasing. Purchasing is done for the property. If we're talking about a lodging property, it's done by a procurement officer known as a purchasing manager or a purchasing agent, and that individual is responsible for purchasing all of the items, all of the material resources that go into the inputs for the organization. And the trick is not to buy the cheapest goods. The trick is to buy quality goods at the lowest price. And you have to have checks and balances, as you know. So the procurement officer, the purchasing manager, will buy the items, and then when the items arrive, they'll arrive to the receiving agent, and the receiving agent will check the items for quality and quantity, and will put those items into storage, and then the storage staff takes over from there. And there's a figure 9.3 that gives you a picture of how that process works. And the electronic system that's used as part of procurement, as we've been talking about, technology is so wonderful in our industry, and it is in its infancy. It always is because of Moore's Law. The technology we use for that is called electronic data interfaces, where we automatically interface with suppliers in the supply chain. What is the supply chain? Supply chain is all those organizations that supply us with the materials we need to provide our services. I'll give you some examples about that. And then moving from materials into people, we know, and we've already talked about, you already talked about in your human resource management course, when it comes to human resource control, which is not a bad thing, it's simply behavioral standards. And that section gives you the concept of performance management systems. That's how we judge the performance of people in our organizations. And again, if you look at figure 9.4, you see that old model that I keep giving to you: objective, strategies, policies, standards, and procedures. And those things get turned into documents, human resource documents, from your strategic plan that govern the standards for behavior. And that ends up in your employee handbook, and that results in eventually the performance appraisal, where you do nothing but compare actual performance to standards. And what can happen? Well, actual performance could be above the standards. That's a good thing. Actual performance can be at the standards. That's a good thing too. And if actual performance is below the standards, then we need to take some kind of remedial action. And I go into telling you about the whole performance management process. I give you a picture in figure 9.5 that shows how that process interfaces. And there's a really crucial tool. I have to tell you, I had a GM one time, and I thought the man had a photographic memory. And he would call me into his office, and he would tell me that I had promised him something 6 months ago, and that it was now due. And he would quote exactly what I told him in the office. And I thought, this was amazing. This guy is amazing. Only to learn that the man was using what we call the critical incident method. And that's nothing more than when you have important points of contact, you jot them down, you type them down, and you keep them in a folder. You trace them for a future date, and it has to do with performance. And then and what he would do is he would look at the file on the day that I was called back into the office, and he would be able to quote verbatim what I told him. So it was nothing more than a method, very powerful performance appraisal method. And I talked to you in the chapter about various forms of performance appraisals and about management by objectives, which I already talked to you about, and how it's also a performance appraisal in addition to being an objective setting process. And then go into the problems with performance appraisals. And my guess is, because I know this is true in so many organizations, people don't do the groundwork that I'm talking to you about, and therefore they don't have the standards, and therefore they have subjective performance appraisals, which I think I already told you about, and that is not professional management. And I talked to you about informal appraisals. Informal appraisals are coaching and guidance. Informal appraisals are those things you do once a year, once every few months, and I give you a checklist for those. And so what you have in this chapter is you have the interface between finance and accounting systems, which keep track of money, in this case resource expenses, costs, efficiency, improve efficiency, lower costs, and human resources, which have to do with those individuals who are what we call human capital, and those individuals are worthy of our investment through their performance in the organization. And then finally, technological resources, which encompass both human resource acquisition and maintenance, as well as financial and accounting functions. And that's really Chapter 9, and we're out of time. And so I'll see you in the next clip.